So the IMF deal fell through. The volcano bond is dead. But recently, there was announced in the open a proposal for El Salvador to repurchase some of their debts and to kind of do that kind of restructuring in the open. What does that look like, and what are the ramifications of that?
So that was a really interesting and unexpected announcement. I have to say it caught me by surprise. I think it's important for several reasons. You know, a sovereign debt analyst, when you're looking at a country, you're looking at two things for the probability of repayment. One is ability to pay, so what's the government's capacity to actually pay? And the second thing, which is sort of orthogonal, but not always, willingness to pay. Does the government want to keep paying the debt? With this announcement, I think that they confirmed willingness to pay in a way that they hadn't before. So people are thinking, okay, the government, at least for now, really genuinely wants to keep paying the debt. So the likelihood of a default in 2023, so next January, I think has fallen significantly. On capacity to pay, nothing has changed, because the country still has the short-term financing options that it had before. In the long term, it hasn't done a fiscal adjustment. It hasn't raised tax revenue or cut expenditures. So long-term bonds are still trading more or less where they were before. There are two relevant bonds in this announcement. The 2023 bond, $800 million that matures in January, and then there's an $800 million bond that matures in January of 2025. And so they offered to repurchase those bonds in the secondary market at whatever the market price is at the time. So before this repurchase announcement, the 2023 bonds were trading at like 75 cents on the dollar, and they jumped up to like 88 cents on the dollar. And the 2025 bonds were trading at like 35 cents on the dollar, and they jumped up to 50 cents on the dollar. So, like, what is the rationale behind a debt repurchase? Why is the government trying to do it? Because suppose they are able to buy back all of the 2023 bonds for 88 cents. They're going to save themselves 12 cents per bond, plus, since they're buying them back 6 months before maturity, half of a coupon. So like half of 7.75, so 3.875. So they're gonna save themselves 12 cents in principal plus 3.875 in coupon. By buying the bonds back early for lower than face value, they're saving themselves some money. And with the 2025 bond, if they're able to buy those back for 50 cents on the dollar, they're really wiping out a lot of debt and a lot of interest payments. So that's the rationale. With the debt repurchase, there are all kinds of super interesting dynamics. It's a strategic game. So the choices that every stakeholder makes impacts the payoffs that the other stakeholders make. So in a very stylized sense, there are three players in this game. There's one group of bondholders, a second group of bondholders, and then there's the government. So as a bondholder, suppose that all three of us were bondholders of the 23 note. What we would want is for everyone else to tender their 2023 notes and for us to keep ours and hold to maturity. Because if everyone else tenders their 2023 notes, that reduces the risk of default in 2023 dramatically, and we can get our 100 cents on the dollar in 6 months plus the half coupon payment. And then the government also has to play a game here, which is very interesting. It's a game that they haven't been playing so far, and the game is as follows. The government, I would expect, to play hardball. They want to play up default risk. They want to say, listen, if this debt restructuring doesn't go according to plan, if not enough bonds are tendered and the price is too high, then maybe we won't be able to repay the debt. You know, it's not uncommon in these negotiations for the government to bluff a little bit, to play up default fears, because they want more bondholders to tender their bonds, and they want them to tender their bonds at a lower price to achieve the largest savings for taxpayers. So I wouldn't be surprised if in the coming weeks and so on, the government starts playing this game a little bit, although the announcements have been so strong about willingness to pay and capacity to pay and so on that it's unclear that this bluff could even work.
My understanding was that often when countries decide to do this kind of debt repurchase, it's done through an entity besides the state, like someone else, to keep it somewhat more private to avoid affecting the price you end up having to repurchase the debt at. How does them making this announcement publicly really affect the dynamics here and change the game that's being played?
So that is another modality of debt repurchase. I can't remember what the formal name of it is, but like an informal name, you could call it like a stealth debt repurchase. It's like you sign a non-disclosure agreement with Bank of America or Merrill Lynch or whoever. You essentially give them a bunch of money and ask them to repurchase debt on your behalf for as low a price as they can. So there's a trade-off there, which is that if there's a big buyer scooping up bonds for cheap, that will raise their price. It's difficult to access a large quantity of bonds if you do it in a stealth way like this. So these kinds of undercover repurchase operations happen, and the government collaborates, again, by spooking people into selling their bonds. You make these statements that are a bit wishy-washy about willingness to pay. You make statements that are wishy-washy about capacity to pay. Sometimes you outright signal that the debt is, illegitimate, or that maybe you're going to repudiate it, or that maybe you're going to. So these things can happen, but it's not what El Salvador is doing now. El Salvador is being more upfront about it. I think to a certain extent it makes sense, because talk is cheap, and so they can say that they're going to pay, and they can say that they have the resources and so on, but a lot of people just don't believe them, and so they're going to want to tender their bonds, I think. There's an intercreditor equity issue here. I know that sounds like gobbledygook, but there are some bondholders that hold short-term bonds, 2023, 2025s. And then there are some bondholders that hold, the 2050s, the 2052s, the 2038s, or I don't even know which ones there are. Some of those longer-term bondholders might be upset, might not like this operation, because the country has scarce resources, which I haven't talked about. It has the special drawing rights from the IMF that are at the central bank. They're going to use part of them to fund this debt repurchase. They have some domestic financing options. They could stuff domestic debt into the banks and the pension system. It's called financial repression. There are some foreign assets that they could maybe sell or privatize, but really there isn't that much in terms of short-term financing that the country has. So it looks like with this operation, the country's going to blow a lot of those one-off short-term financing options, paying the 2023 and the 2025 bonds, but it's not going to use that money to pay the 2050s or the 2030 whatevers. It will only use those resources for those long-term bonds to the extent that they fund the coupon payments. So if and when there is a default, there will be less resources in El Salvador to justify a higher recovery value for those long-term bondholders. So there are all kinds of interesting dynamics.